Hey guys, this is Greg McLeod here from the Forex Cash Machine, and I'm just trading the pound versus US dollar currently. This is the 13th of November 2019, and we got long multiple positions in that one spot 2850 area. And so we're looking for price to return back to the one spot 2900 area, and it's taking its time. We've been in this for maybe a day or so, um, but we're actually you can see where price rallied high, and usually we see a return to the scene of the crime where price broke here, came back down, and then it formed a double bottom pattern right here, which is a high probability setup right in there, just a little off from an actual double bottom, a few pips. But we can see that price came down to that one spot 2820 area, a level of support that we see, and we can highlight that with a couple of ellipses, a couple of circles there to show us where buyers stepped in at this level and thought that the pound was at a very low exchange rate to the US dollar at this area. Now, when we trade, I like looking for, this is a tip, that you can look for a confluence of support areas. This is a classic support zone where we have actual physical price moving into this area. We can see by the wicks and the penetration of the price action that we hit this one spot 2820 area. Now, there are other forms of support and resistance. And many traders look at different support and resistance levels. Some of them use round numbers, bankers levels. Some of them use pivot points. Some of them use a common one that many people are familiar with is called Fibonacci. Now, Fibonacci is based on a price or a number series that was actually developed in India, but this guy from Italy brought it to the Western world. Okay, and so we take basically there's the tool that the line tool for the F on it, Fibonacci retracement, and how we use is we connect a swing low to a swing high, and once we have this swing low and swing high connected, then what will happen is we have levels of support that are drawn. In an uptrend, levels of resistance are drawn. In a downtrend. Now, for illustration purposes, I'm going to change the color to like a purple. That way we can see where there's a confluence of support and resistance in an area where we have classic support shown by these two circles at this red line. Then we have Fibonacci support coming in at the 61.8% retracement, or one spot 2817. So rough about 3 pips, there's confluence in that area where you have people that just watch Fibonacci. They're Fibonacci people. Just like you have Democrats and Republicans, you have Fibonacciers, and you have people who are classic support and resistance people. Then you have supply and demand zone people. Then you have moving average people. So you have a number of different people, and some people look at all of them, together. Where we find all these points meeting, that's where we usually find areas of support. And we can see that price dropped down to this area, rallied up, found some more support, and then now it's taking off nicely. And we have, again, in my targets, one spot to 2900. That would give us another double top, not a double bottom, when we get up to this point. This is why I'm looking at this as a typical target for this currency pair. Okay, so we're still a ways from it. We're about 28.49, and that 29.50 is also a banker's level. The 50 level is a banker's level. 70, we go in increments of 25. The bank's line, you're looking at 25 levels, like this whole number, round number 128.00, very close to the 78.6% retracement 27.94, but we never got below that. Why? Because people bought it. They thought it was a bargain, a good deal, a good value at this price. Just like you buy shoes or a car or big screen TV, you're going to compare price and you're looking at the value. And they're saying that the pound was worth about 1.28, $1.2820 versus the US dollar. Found it is good value. And so now we're looking for a price to meander back up to this area, the one spot 2900, and looked like it was making some progress. And we've got quite a few positions that will take profit as these start to break. And there's lots of congestion, lots of chop in here. There's probably some faster moving pairs that we want to take a look at, and one of them probably is a Kiwi dollar. Looking at Kiwi dollar as a possible short. Had a tremendous rally a couple of days ago or a day ago, and so we can actually take a look at that. And you can see that we had this huge run up yesterday, and so now we're topping out in this area, and let's see if we can maybe come back down to the 63.80 area, maybe 63.60. But this has probably a lot of legs here, and then we see a Kiwi dollar or the Euro Kiwi setting up as well for possible bounce higher. But again, going back to our pound dollar, we can see that we're looking, pulling back a little bit off that 28.55 area.